So let's talk about interest rates. The Fed has had interest rates at zero for 7 years now by the end of this year. What's it going to take to get the Fed off of this policy?
Goodness, that's a question everybody's been asking me. They declined to raise interest rates in September, even though we've taken the unemployment rate down from 10% to 5%. We've had a 6.5-year expansion, and it does seem like it's time to move away from zero and see if markets can perform well in those circumstances. But they've chosen to look at some of the risks on the outlook, some of the risks coming from Asia that may prevent us from reaching our inflation target, and that's leading them to hesitate.
And meanwhile, the picture on the jobs front is not so encouraging.
Yeah, the last report, which dates from September, showed a pace of job creation that was quite a bit lower than we had been enjoying through much of the year. And a lot of participants see this as a reaction to what's been happening internationally, because the places which are sensitive to trade or to energy, because energy prices are down, have really struggled to create jobs. Again, this is feeding into a view that the Fed all of a sudden no longer has the justification for raising interest rates.
And how do you view the reaction from market participants in terms of how the Fed has communicated its position?
Well, to summarize, they're frustrated. The Fed has described its current posture as being data dependent, and that phrase replaces things like "will be on hold for a considerable period" or "until a certain variable hits a certain number." It's an honest characterization saying that they're data dependent, but the markets are wondering, well, what data and how dependent and how much change do they need to see? And so without any further detail, the markets feel a little bit unmoored.
So looking ahead, what are the clues that we should be looking for in terms of the Fed's future course?
Well, between now and their critical meeting in the middle of December, we'll get 2 more employment reports. We're certainly hoping that job creation picks up from what we've seen recently, both for economic progress and also to give the Fed a better sense that the labor market's in good shape. Let's watch prices. Energy prices seem to finally be moving back towards more normal levels. Maybe that means that the Fed will get closer to its inflation target. And by all means, let's keep an eye on some of the international events that have kind of clouded the outlook, China in particular, and see if there's any additional clarity that will help the Fed feel more comfortable with a decision to raise rates later this year.